Into that. Welcome everyone today to our Partner Solution series. This is our fortnightly series that we get to invite our LightYear strategists, our LightYear members, LightYear users into partner solutions that we provide to our members. And this is an area that in a business division that I run and that I sit as CEO, and I know I've discussed it before in relation to ESOPs and employee share plans, but I thought it would be a great opportunity to bring today our ILA partner, Cake, to the table. So I'm joined today by Cal Davidson and Charlie Ross from Cake. Charlie's the in-house legal and Cal is the head of partnerships. So hi, Cal. Hi, Charlie. How are you?
Great to connect with everyone. Thanks for joining in.
Thanks.
I apologise in advance if anyone hears me shushing at all. I've got my colleagues left me with a puppy down here at my leg to look after while he's gone to Bunnings. So if he's bugging me, I apologise in advance.
It's fantastic. Yeah, so you know, I'm really excited about the partnership I've got with Cake. I've been using it in particular of recent times for LightYear Group and the capital raise that we've been running, and which has been very successful. And I'll talk about that a little bit later in the webinar. But we're also using it in relation to a number of employee share plans that we're rolling out for LightYear members. And so the majority of today will be Cal and Charlie talking. I'll be here to answer questions and sort of moderate it, but then I'll jump in at the end for some discussion points. So yeah, I won't run through this. Obviously, everyone knows we're running on a Thursday Partner Solution series. They're growing in stature, which is fantastic. I've got a slide coming up, which will be a little plug, but they're some of the partners that we've got into the LightYear Group. It's a fantastic solution that we've got these partners, just to give Cal and Charlie a bit of background as well. So LightYear Docs is an online business and legal platform, as you're both aware. We've brought a number of partner solutions in, and which is what's behind my webinar series. And so we're sort of saying, you know, as an accounting or advisory firm, rather than trying to cover all bases, we're giving you partner solutions in relation to Change GPS being a front-end solution. We've got Abbott-Family, which is our external legal firm, Eventum Optimum, which I provide some consulting into as well, which is a business turnaround, pre-insolvency, asset protection, does mortgage registrations, PPSR, caveats, and a whole heap of other things. And one of those other ones is obviously ILA. And then ILA has a number of partnerships, one being Cake, which I've got on that next slide there. So LightYear Docs into ILA into Cake. And it's actually quite good because Cake's based on the Gold Coast, which I am as well. So that sort of has worked well, hasn't it, Cal? We've had a couple of catch-ups, managed to get down to Burleigh Pavilion as well for a more social catch-up.
The pavilion's a tough place on a Friday afternoon, mate. So
it is spectacular. There's plenty of interesting things to look at. The view's fantastic, and the view around the pavilion's not too bad either. So today's webinar is looking at, as I said, ESOPs or ESSs. We'll sort of talk about the definition of that in a sec, but looking at solutions for rewarding, incentivizing your teams, and also future exit business succession, which I was talking to Charlie and Cal just before we started, that I've been working with some LightYear members in terms of not only their clients, but also their own practices in relation to succession and everything. And then just at the end, touching on cap tables and capital raising, utilizing Cake. So, you know, I really love the name Cake, and even your invoices, I think they come out, the name of the company is Bake That Cake.
Yeah.
And the symbolism of the cake and everything, and sharing a piece of your cake. Do you want to give a bit more background in relation to that?
Well, that's certainly a major part of it, right? So really, what drives us is the belief that the organisations that are changing the world are being built by great founders, but in order to actually be able to change the world, most of those founders and business owners need to be supported by some great investors to help them along the way, and that can be providing them, that investment in various sources, but also by great teams, right? And the bit that we're going to talk about today is about how do you actually leverage your equity to actually help attract and build great teams, but then also incentivize those people and also actually retain them as they add value to your journey, right? So that's what it's all about. And as I said, it actually fits very well into the whole cake name, but also the whole concept about it's not just about me. It's also about how do we actually share that cake? How do we grow it, you know?
Yeah, just not me sitting here and eating my cake.
That's right. That's right.
I've got a great birthday cake sitting here covered with donuts, and it was my birthday yesterday. And the LightYear Group team sent me this amazing thing covered in. It's got Nutella, picnic bars, donuts, cake. Got a bottle of Dom sitting behind me, which I got as well from them, which was fantastic. But it's not about me sitting here and eating my donuts and cake. It's about sharing it amongst and also getting other participants, as you said, so external investments in to try and grow that cake.
Lovely, for sure.
So just about ILA, outside solutions provider. So we provide, majority is in relation to employee share plans, but we also do white label accounting solutions, self-managed super funds. So the tax compliant, we can arrange the audit as well. Loan processing, we're doing a lot of lending and stuff and providing lending solutions. So tax services and paraplanning. I've just got a quick plug there. I am flying, I'm meant to be flying to Sydney tomorrow for the Australian Accounting Awards and ILA, which is, I'm on all that we've got this, but we're up for the finalists of Startup of Firm of the Year. We're down to the last three post the nominations. There was a large number that were nominated, down to the final three. It's in Sydney at the Star Casino tomorrow night. When I said I'm supposed to be going, now that COVID seems to be hit, they're apparently at 5 o'clock today, they're talking potential lockdowns. Restrictions have already been put in relation to masks and everything. So hopefully I'm flying to Sydney tomorrow morning, and hopefully we end up being a winner of the award as well, which would be spectacular.
Best of luck with that, mate.
Thanks, mate. It's be good to get out and put on the penguin suit and have a few drinks. Although I've seen that they've already announced that you can't drink standing up as of the restrictions announced this morning. You've got to wear masks through Sydney and indoors and outdoors. So I don't know what the difference between standing up and sitting down and drinking, but I guess it's social distancing by sitting down.
Yeah.
So I won't run through that. I want to jump into letting Cal and Charlie present, but I've talked about this before in relation to how an EST works and in terms of share subscription and KPIs and hurdles and everything. This is just a bit about the process and involvement that ILA has that then mirrors into cake. So Cal and I were talking about before, ILA sort of involved in holding your hand and working through the process with you. And we've got the documentation as well, which is backed by, Grant's been doing a lot of work with that on it with me, and also Tony and Ash, and in relation to building out that EST trust and the rules and the employee documents, so that the offers to participate. And we issue share certificates through Cake, but and then we're involved strongly in the consultation piece with the management and employees, because it's really important, which we were talking about before, is that it's not about a cookie cutter. It's about making sure you get the plan right and you get the buy-in from everyone, because once you do, the uptick that you can get, which Cal will go through, is just fantastic. And so then that's when the technology app stack sort of jumps in, I guess, with Cake and streamlines that process and that step. And also we use Cake, which I'll show you further in relation to managing our cap tables and also our shareholder communications, which we love coming out via Cake. So I won't talk too much more about that partnership. What I'll do, I'll allow Cal to jump in now and share his screen, and I'll be here to moderate and ask some questions and stuff, and Charlie will jump in as well.
Thanks, Michael. So if you can just stop sharing and I'll just switch over. Hey, first of all, I just want to say that if you have questions as we go through, please drop them in the chat, and I'm more than happy to actually answer them as we go through. My name's Cal Davidson, and I've got Charlie with us. So I look after partnerships. Charlie looks after, he's our in-house legal counsel. He's also heads up our operations, so knows how all the system works. We'll do a bit of a tag team today. So I'll talk about kind of why you'd use employee shares, and then also the process as well, because there's really two elements of the process with making the most of employee shares. There's a technical element, but there's also actually the people and the change element of them. And if you do one without the other one, you're really not going to be able to actually leverage the value of that. So it's super important. So I'll do a little bit on that, and then I'll hand over to Charlie, because he can actually take you through the CAPE system and actually show you how it helps streamline the automation behind it. Because it's one thing to want to be able to actually set up an employee share plan and actually share the love with equity. It's another thing to actually do it technically and then actually administer on an ongoing basis. Right. And that's where we really come into play, because we've designed a platform, a SaaS-based platform, which is really all about how do you actually reduce the amount of workload that's in there for the accountants that are involved, the other professional services providers, but also for the businesses themselves. So that's where we come to the party as part of the I Love Accounting offer in this space.
Just make sure, as Cal said, jump in the chat, but make sure you so not just to panelists but to all participants, so everyone can be involved in the chat, and we'll answer any questions as we go through.
Awesome. There's a usual disclaimer there. Just a little bit of my background. So I've got a financial services and equity markets background. And the Cake platform, we have been in operation for just over 2 years now. We've got 600 companies using Cake in Australia. We're about to expand overseas. So the next markets we'll be going for is Singapore, the UK, and North America. The way that the system's designed is that we work with the companies, but we also work very collaboratively with a whole bunch of partners across the space. Hence the partnership with I Love Accounting, right? So, so what we'll run through today is, as I said, why do you want an employee share plan, and what's the recipe of putting it together? So this is some research that was actually done. EY do a annual survey in the startup space for FinTech Australia, and this is the research that came out of the 2019 census, right? So they were asked about what are the biggest challenges they've actually got as a startup, and 41% of them actually said attracting suitable talent, and then they talked about the different areas they have shortages in. Now, you look at that in terms of the startup space, and it's probably not surprising that it's one of their top challenges. But if you actually go to talk to anyone, any SME customer, any small or medium business, and you ask them what one of their biggest challenges is, it's going to be on the people side, right? And that's where, through the employee share plans, you can really actually play in and add some value about that. So the first element of it is when you're thinking about how do I actually attract a really great talent to the organisation. So in a startup sense, one of the key elements of that is I might not have the dollars that are available to actually compete with some of the more mature businesses. If that's the case, I can use equity as part of the mix, right, in terms of what I'm doing. I'm also actually looking for employees that ideally have a real alignment in terms of that ownership mindset, right? So that's also super important in terms of actually having equity as part of the mix of their awards. And it's also aligning them in terms of the timeframes of the results you're looking at. So you want to be able to generate the results in the near term, but you also want to be actually generating equity value over time. So it also helps in that regard as well.
It's quite interesting, Cal, just on that slide and everything. We're LightYear Group, which is in effect in the startup space and has been operating about 18 months now. And as I was saying, we're going through our final capital raise in relation to the rollout and development of LightYear Docs 2.0, which is well advanced, but we're pretty close to closing that cap raise, the maximum level, which has been fantastic. But we'll be in the process of rolling out an ESOP for LightYear Group as well. And one of the reasons is in relation to the talent we've got, but we also have a significant opportunity to attract other talent at the moment in relation to sales space, which will allow us to take it to the next level in terms of, we're doing a capital raise to get money to take our platform from what we originally started with to 2.0, which is bigger, better, greater. But we're also then using the ESOP to attract, to keep not only retain our and incentivize our current team, but also to attract, in particular in that sales space, because we're ready now. It was quite a soft launch to our members, but we're ready now to take it out and go pretty hard with LightYear Docs 2.0, and which will also in turn add value to those shareholders that I've just done a final capital raise on as well.
Yeah. And from a cake perspective, we're going through the process at the moment of actually this international expansion, taking the business to the next stage. We need to have 18 players in order for us to hit the goals that we need to hit over the next 12 to 18 months, which is going from 600 active users to 6,000 plus active users, right?
Yes.
That's a huge challenge, right? And in order to be able to attract those 18 players, we need to have a mix of you needs to be the right REM mix in dollars, but it also needs to be an equity incentive thrown in the mix there as well.
Yeah, correct. Well, we're talking about similar membership numbers as well in terms of LightYear platform, and we want to incentivize once we hit those different hurdles along the way in terms of membership and everything, and we will track the right people into and be able to go for us to go after the right people, but then us to then incentivize and then based on hitting certain levels. So,
yep, for sure. This is just some research out of the Employee Ownership Association in the UK, just talking about the productivity levels growth, and they actually compare this to the general market. And there is what they've actually shown through their research is there's also a productivity uplift out of organisations that actually have employee ownership as a core part of their employee proposition. So a lot of these are more mature businesses, so they're not just in the startup space. And it's not surprising because if you think about the alignment that actually having a piece of that pie actually creates, it definitely gets people aligned, not only behind doing their job on a day-to-day basis, but actually building that value for the customers and also for the business in the longer term. So one of the key elements of most ESOP plans is there will be periodic vesting of those plans. So if someone comes on today and joins the Cake team, they're not going to get given 100% of the equity options up front. Generally, it will be vesting over a period of time. There's different ways you can actually structure that. A very common way that we actually see it structured would be a cliff-based vest after 12 months. So after you're here for 12 months, you get a first tranche of options. And then from there on, there might be periodic vesting over another 3 years. And a typical structure that we might see in the startup space might be, say, 25% of the options vest after year one. And then there's quarterly vesting for the remaining 75% over the 4 years. So it gives them an incentive to stick around and to actually, as they accumulate as those options vest, they accumulate the value that's actually been created through those options. So that's a very typical structure that we see. As I said, very rarely would you actually see all the options granted day one, because then you lose that incentive around the retention side. But the other thing you can also do with them is if you do have specific KPIs or milestone-based triggers, you can build them into it. So, Michael, you chose the example there. You said, hey, if we get to this milestone in 6 months, or if this milestone in terms of number of users in 12 months, then that will trigger the vesting. So there's also options to have that as vesting events as well. So it's very flexible in terms of how you actually structure it and what the incentives are, and what triggers the vesting of those options.
I think, Cal, too, in terms of the milestone vesting, we often see on Cake a combination of both. So a company might say, we'll put the standard 12-month cliff, and sorry, that's a dog taking the chair away. They'll take the standard 12-month cliff and periodic, and that the motivation for that is to make sure they stick around.
Yes.
But then overlaying that specifically for someone like, sales staff, where there are really clearly definable KPIs, they might say for every 50K revenue you bring in, you get an additional 10,000 options, and they can be clearly defined and marked as achieved while making sure they stick around in the meantime to keep hitting that KPI.
I think that's important too, Charlie. When I've been talking to people in relation to rolling them out, and when and specifically talking about those milestones that they're clearly defined, and I try and keep it as simple and straightforward as possible. I think the more complex you make it, the harder it becomes, and then the harder it becomes to administer. And
100% agree.
Okay, so we'll get into what's a recipe, and the first thing here is just a run through of the different user cases. So we talk about options, actually employee options. but we actually see them often used for board members as part of their incentive mix, and that can also be used for advisors and contractors as well. So it's just really important to actually understand that it's not just employees, they can be used for other use cases. And then Michael, like I know you do a lot of work with companies who are actually not even at that startup phase or even in the middle of the stage. They actually might be looking at succession options as well. So I don't know whether you actually want to talk to them, but that's also an important use option, which I actually haven't got here.
Yeah, definitely. It's, I mean, it's especially in the accounting firms and stuff, or at least I think you can have a mix, is that you're starting off in relation to rewarding, incentivizing, and also getting new team members on, but also looking at your path in relation to if you're a partner or a multi-partner firm, and where you're going in terms of that. And because it takes time to actually go through and do that succession piece. It's not an overnight thing. And so you're carving up your equity over time. And what's important is that during that time is that you're getting your team engaged and invested in it, and that they're actually increasing the value. So, and as you reduce your equity, then it's being reduced at higher value because the team's increasing that value, because we're doing valuations at each point as required.
Yep. Excellent. So the other key point that we really want you to actually walk away with today and make sure that we're emphasising to business owners is there's actually two elements to the ESOP. So there is the technical part of it, which is actually setting up the plan rules and deciding on what the triggers are for your vesting, and then what the vesting structure is and all that sort of stuff. There's a tax element to it, etc. But as equally as important at the end of the day is the people side and the change side. So if you can have the best ESOP set up in the world technically, but if you're not actually engaging your team to actually make sure that they actually understand the value of what you're actually creating, they understand the alignment of those incentives and the triggers to the vesting, and you're reinforcing that story over time, then you're actually not generating value out of it. And look, the last thing that you want any of your clients doing as business owners is actually being in a position where they're actually giving away equity, but it's actually not being valued at the end of the day, right? So that's a ridiculous position. It's important you manage the people change side of it as well, and the ongoing communication and engagement as well. It's also really important that they actually manage it professionally. And certainly, we'll often see companies come into us, and business owner will be sitting there saying, "Oh, you go, have you got an employee share plan?" They go, "Yeah, we've got an employee share plan." And at best it might be sort of some draft plan rules that they've actually got there. At worst, it's actually written on the back of a beer coaster and was done over a handshake at the pavilion or somewhere like that, yeah. Right? And obvious issues in terms of from a regulatory perspective and everything, but yeah, there is no way that something that's not done properly is going to be really valued properly by the employees either, right? So you undermine the whole process.
Yeah. And I guess that's where ILA sort of steps in terms of, you've got Cake in relation to the technology and also the communication and some of the documentation as well. But ILA is there, not only just at the initial implementation and working with the teams, but also ongoing in relation to whether it's the compliance of it, which we certainly do and have been doing for a number of the clients, or being available there for their team members or regular catch-ups, and just to make sure we're getting it right, and that whether we have to change things or just making sure that piece keeps moving forward.
Yeah.
I think with that too, what a lot of the customers appreciate with someone like ILA sitting behind their ESOP is just being that backboard. So they might have it set up and it's all running and ticking away on Cake, but they might then say to ILA, "Hey, can you log in and have a look at the options we've issued to Joe? Do you think that's a reasonable amount? Does that vesting line up? Is there anything else I should think about?" And then getting that backboard is just really good for them to have the peace of mind it's done right and they won't get headaches later on.
Yeah, 100%. So it's sort of an advisory. Yeah.
So just just in terms of, we do a lot of work with startups, and there are some great incentives with the ESS concessions in that startup space. We won't talk a lot about that here. I think you'll be across a lot of those. But if you do need any assistance on any of that at any stage, feel free to reach out to Charlie or myself. The last thing I just want to really go through is just around the time, well, I guess the actual timelines of how you actually approach it and think about it. And again, this is where ILA will really help you through the process. But from a technical side, you have, the process will start with choosing the plan rules, getting the members' resolutions executed, because usually there will be amendments that are actually required, or approvals that are required by shareholders agreement and constitutions, etc. You need to get your valuations done, and then you actually start activating it. So you need to actually get the letters to the team. You've got the whole vesting that you've got to manage ongoing, and then you have the exercise and the reporting side. So Charlie will show you how to actually do that. And then you've also got the people side of it as well. So again, this is equally important, creating that strategy, getting the engagement with the team. And usually that will be a combination of written communication, but also some face-to-face meetings, following it up. A lot of employees won't be familiar with a lot of the terms we're talking about here, vesting and all that sort of stuff, and the exercise price and that. It's really important that you take the time to actually explain that to them, so that they actually don't get confused by it, because the more confused they are, the less value they'll put in. And then through to this whole process about then ongoing performance updates around what's happening with the value of the company. How does that link back to actually the value that they're creating through those options? And then with certainly with the Cake platform, giving them visibility around where they're at with their vesting, how many options they've actually got at any particular time, what's coming in the future in terms of future vesting events as well.
And what we actually see, Cal, could be good to point out, if you just go back a couple of slides, what I've seen a lot is what we do see is people will come in and they've basically just done the send offer letters to your team, and that's about it. They've skipped the start and they've skipped the end, and they said, I tried an ESOP and it didn't work. So that the first step where you're choosing your plan rules can be one of the most important, and that's where ILA will sort of say, okay, well, what tax treatment are we going for? What are you eligible for? And that will set up the whole sort of flow as it from that point on. And then obviously following up is just as important to get the value from it, to not only make sure that it was done compliantly, but there's value from it and the employee knows it's real. So yeah, the send offer letters will often be where they think they've done it, but it's really not the same in execution.
Yeah, 100%. I mean, we go to, and then I'll even got the members' resolution and everything, and I'll say, have you got a shareholders agreement? And a lot of them don't. And we talk about the importance of that, and especially once you've put in, or you're about to put this in. I mean, it's important. It's an important document to have anyhow, but and how we should handle that process. But that, this is where it seems to take a lot of time, as we spend a lot of time in relation. We have a discovery session, but there's a number of follow-up discovery sessions in relation to getting those plan rules, and before you even get to see, the majority of it's done once you're getting to sending the offer letters to your team and stuff. And
yeah, exactly. And it all goes to the peace of mind, where if you do it right in the first place, then you can have the peace of mind that it's ticking away properly in the back end.
Yeah, correct.
Cool. So just to kind of wrap it up from my side before I hand over to Charlie to actually show you how it works on the platform. But this is actually looking at from the employee side. So we've spoken a lot of it about actually from the business owner's perspective. But from an employee side, this research is really interesting. The interesting thing is obviously financial payoff is really high, but actually the interesting thing is there's a bunch of other qualitative factors in there as well that are ranked nearly as highly, right? So you've got financial payoff 68%, but fair treatment is actually 67%, a sense of community, and their sense that they're able to actually have more influence over the direction of the business, and they're more buy-in into it. And if you go back to the things that we talked about earlier, about the productivity uplift and all those sort of things, you can see that, yes, it's about the financial incentives, but it's also in terms of their whole buy-in into the company. And like if you really what it all boils down to is, is this at the end of the day, it's, Peter Drucker, culture eats strategy for breakfast every day. We all know that intuitively, own businesses, that it's probably the most powerful thing you can do. And certainly having an employee share option plan as part of that process in building that culture can be a really powerful tool, right? So that's absolutely critical.
It's a
So
great
I'll hand over to Charlie, and he can show you, the nuts and bolts on how it'll actually work.
So it's interesting. I've been involved in a number of groups in CFO and CIO type roles, and there's been groups where they think they've got the culture right, and especially from the top thinks there's a great culture, but then when you actually start getting down through to through the layers and speaking to the team, that none of them have actually ever bought into, other than the management who seem to have bought into the culture, but the actual business. And so you've just got it wrong then, haven't you? Because yeah.
Exactly right. Okay, cool. Again, everyone, feel free if you've got any queries on how any of these features work, or how something else might work, feel free to drop it in the chat. If I haven't seen it, Michael and Cal, feel free to shout it out for me. So these are all demo accounts. Obviously, I'll take you through how both the customer and an advisor for the customer would set up an ESOP on the platform, whether that's like a CFO or an accountant like ILA doing it all for them. There's a lot of that hand holding, which the customers still really appreciate and get a lot of value from. So basically, to set it up, you can go into their equity plans, and you can see here that this company has 3 separate option pools. In the first instance, that can be quite useful for companies. You might have a company that have one option pool, which is based on the startup concession, which they set up when they're a startup and they put the initial employees in there. But since then, they've actually become more of an established business, and they need to set up a new plan for new employees, but it's not going to come within the startup concession. Reality of that will be there'll be different plan rules which will apply, and it's easier just to track them separately. So that's what this is really quite useful for. But if we jump into this general ESOP, this will just give you a good idea of where it helps them get that peace of mind and what's going on once it's been set up. So in terms of the ongoing management, they can get a quick summary there of everyone inside that ESOP, and then go in to see further details into their progress within that sort of process. So not only will this avoid them going to the company and saying, Katie coming to the company and saying, hey, how many options do I have every couple of weeks? They'll be able to log in and see that themselves. And if they do ask you, you can find out in a couple of seconds. And the advisor will also have peace of mind that it's all being handled, and they won't be doing, bulk spreadsheets every couple of months trying to reconcile it all when they get it all piled on their desk last minute. So you can see here, it keeps track of that automatic vesting. So this employee here has obviously had a 12-month cliff that vested on the 1st of January, and then it's vesting monthly thereafter, right up until the 1st of January 2023. Once it's been sent out and accepted through Cake, it will automatically apply for all of the relevant documents to be saved to that account. So if they ever need to view any of those documents, they've got access to them, you've got access to them, including their signed offer letter and the plan rules that apply to it.
And I love that, Charlie, because we're using it for under the raise section at the moment, obviously for LightYear Group, and all those documents are going out to the subscription application that we're using through Cake is fantastic, and just the process in relation to inviting them, but also those documents are there for them to log in afterwards, and we're using that communicate channel as well a lot now with all our shareholders, and we're attaching documents and sending them out, and if we're having meetings or just giving shareholder updates, and it's and it really alleviates because before we were using Cake, we were using spreadsheets, which typically people do. And just trying to keep track of it, and also manually getting documents and creating documents when people ask. Now we can actually just send them out or send links to them, communicate and include them in here.
I might show that while we're talking about it. So yeah, we see lots of customers use it for that purpose, where you can set up groups. So it's not all or nothing, and you no longer need to use BCC and Gmail or anything to send out bulk announcements. So what we often see is companies making a different announcement to the option holders that they might make to all of the standard shareholders. So you might do an investor update, send it out to all of the shareholders, but say, hey, for the employees, I'd like to add this little bit of extra information. And you can very quickly and easily send that out as a new announcement through the platform. They'll all not only get an email from Cake to read it there, but that will be another nudge for them to go, hey, I do have options in this company. I'm going to log in and see how they're going. And then right at that point, they've been nudged with that incentivization of, I should probably stick around for a bit longer and earn those options. A feature we will be adding pretty soon, which has been in demand, is we'll be allowing the companies to add a sort of predicted value or an estimate value of the options at all times to update in real time. So the employees can log in and say, okay, at this date, it will, based on what the founders think, be worth this much. Obviously, the liquidity of the options is another thing to consider, and that comes to the discussion with your advisor like ILA to talk about how they can be disposed of and where there might be opportunities for that. So in terms of the documents sitting behind it, the main ones are the plan rules and the offer letter. So to set up on Cake, I might even quickly show you how easy it is to set up an ESOP. You'd basically be with the advisor. You can choose a standard, which will automatically implement a 10% pool and apply a couple of templates. Emphasis on templates. They're not suitable for all customers. So that's where it is useful to have the advisor say, hey, you're actually not eligible for this. You should be using this template. Either way, they can easily upload their own, and we see that quite a bit. We'll say for the purpose of this that they do a custom. Majority will be to ordinary shares, and we'll say, okay, this will be for a 5% pool. Option price usually 0. We'll say the exercise price based on the valuation is 1 cent, and we'll say there's an 180-month or 15-year exercise period. And as easy as that, we've created the ESOP pool. And the next step would be you come in with the advisors and say, okay, let's get the documents going. One of the huge benefits here is that the founder's not really left in the dark. The sort of traditional way that this would happen is there'd be lots of emails back and forth. And what that does, purely by fact that founders and advisors are busy, is it makes it take a lot longer. So the founder might say, you know, hi lawyer or hi accountant, I'd like an ESOP. A week later, they say, great, when do you want it? And it sort of goes on like that. Whereas here, we often see in a couple of shared screen sessions or a couple of workshops, they can take the bulk of the work out and get it done.
It's quite interesting, Charlie, because some of the accountants I've spoken to that we're either in the midst of rolling out an ESOP or we're still in discussions, is that they've actually been talking to their staff for 12, 18 months about rolling out an ESOP, and nothing's eventuated. So.
Yeah, I hear that all the time as well. And I sort of say, well, how come it's taken that so long? And they said, we emailed one person and they said this, but went this way and they said this, and we put some on paper, but then we lost the spreadsheet. And
then now the staff or your team is disengaged with the whole thing and don't believe it's ever going to happen.
Yeah, I actually had a customer the other day say, look, we actually did an ESOP a year ago. But then we realized that not only was it not compliant, but I asked my staff about it and they thought that it was just void. They just assumed that it didn't mean anything. But then when they got their offer through Cake and were able to log in and see it and click accept and sign it digitally, it was like a real, okay, we're on this journey. It's a very simple step to add your plan rules. So this is often where the advisor will upload their own. They'll work with you on what wording you need. If you did want to start with the Cake template, everyone's welcome to do that, whether it's a legal or accounting firm or the customer directly. You can come in here and edit anything you need, and you'll see there's automatic tags added throughout. So the tags are most useful for the offer letters. If you had a client that, let's say, wanted to use this ESOP for 20 to 30 staff, you sort of cringe when they ask if you're going to create all of the offer letters for them and send them out for signing and execution, because you think, well, that's just a lot of data entry and they're going to come back and say they want to change them every couple of days before we send them out. All you need to do on Cake is just make sure you're happy with the base offer letter. And then all of these bits here are variables which will be automatically updated through the platform when you create the offers, which I'll show you shortly. So in terms of if you're trying to get this done in an efficient way, it can really allow it to be more profitable on a fixed fee basis for a lot of advisors to do, because they know the scope's not going to just completely blow out and they're not going to be up till midnight trying to get it all sorted. So there we have the two primary documents, and as Cal mentioned, it's always important to check if you need shareholder approval as well. There's a template here, and obviously ILA would go in and have a look and see if that's everything needed. And it's always good to get the director's resolution as well. Both can be sent out and signed within the platform, so no need to go back and search for emails. So in terms of adding an offer, it can be done very quickly. If you know what you want, we'll say we're offering to Charlie. We'll say he's actually getting 1.5% because that's what we've agreed, and we'll automatically calculate that based on the number of shares and options sitting in the company currently. it will automatically apply the most common vesting rules that we see, but these can be customized, obviously. So here it's applied for 25% of those options to be vesting after a 12-month cliff, and then the remaining 75 to vest every quarter over 36 months. But you can quickly and easily jump in and change that if you want, including adding new milestones.
Yep.
But we'll say for the purpose of this, we want to go standard. We'll say Charlie started on the 1st of January 2020. We see it backdated a lot in terms of the start date. Obviously, you wouldn't backdate the grant date, but you know, it's unlikely founders get to issue the option to the employee on the day they start. And then we'll say the exercise price is 0.01, which is definitely worth having the advisor help out and finalize, because that can often be the make or break of whether it's compliant for tax purposes or not a lot of the time. And there we have it. The offer's sitting in there and ready to invite. Now, let's say that they said, great, we pretty much want this offer to be the same for all of our employees. You can simply duplicate and you can say, okay, I think I've got, let's say new Charlie, who's another employee, is going to be on pretty much the same, but actually he's getting 0.5%. So apply those changes, it automatically applies the rounding. And new Charlie, the only other difference was he actually started on 1 March 2020, so he start vesting a little bit later. And as simple as that, we've created 2 different offer letters which can be sent out. Now, when we send them, so I'm going to add this one. So when we send them, it will double check the exercise price, again, just peace of mind. And this is where they'll go back to ILA and say, hey, is this still a valid exercise price? Should we still be using this? It will show you the plan rules that you're using, just in case you've had a couple of different templates in there. You want to make sure that they are the right ones. And we'll show you the offer letter, which will be sent to the employee. So they'll very easily be able to go in and say, yep, this is right, starting on 1st of March, perfect. That's the exercise price. This is the period we wanted, and there is the automatic vesting rules which is applied. So then you can email it directly to them or just send them a link. You could send them a link on Slack if you wanted to, which would then go to the employee where they can log into their own investment portfolio. They'll see this ESOP offer. They can really easily see how it's all vesting. So they can say, oh, great, it's already vested. That's perfect. See the key details. You can share your shareholders agreement, your constitution, anything you want with them, add your details, and then go forward to sign them. And that's all integrated with DocuSign. So this really just keeps it all in one spot rather than having this process, which traditionally would be spread over a lawyer's emails, an accountant's emails, spreadsheets, and probably beer coasters in between. I'd say
so streamlined, and I love that whole DocuSign. I mean, in terms of the capital raise so far too, it's just been it's awesome. And I mean, it'll go to the potential investor, then it comes back to the directors. We sign it, it's finalised, and then it goes, okay, issue shares or update payment, issue shares, and then away we go.
That's it. And you know, whether you're a really fresh founder or quite an experienced CFO, I think you get the same aha moment where you can just see it. You can see the flow in front of you, because no matter how experienced you are, if it's not within the same spot and you can't see the summary, you're sort of thinking, oh crap, did I send that to that person? How many have accepted? Should I be compiling these PDFs? This just gives that peace of mind that.
Did I update the damn spreadsheet? Or I can't remember if I have or haven't.
Exactly. Yeah. And if you're in the advisor capacity, you're getting the email on the Friday night saying, hey, did you send this one out? And you're suddenly opening up your work computer again. Whereas with just a login, you could literally say log into Cake and see for yourself.
Yeah.
So that's a huge benefit of it. So here you can see it's just keeping track of everything going on. Another peace of mind sort of thing where they've sent out offers and they haven't been accepted, sending reminders, making sure that the valuation is still current for them. We'll go back into the ESOP that we did create. And we can see here that they've signed, so we can simply grant them. We'll grant them today. And as simple as that, their options are up and running. You can see where they've vested to under this offer. And we can see automatically that their documents will have been saved. There's the plan rules and there's the offer letter. So those documents have been saved to be able to view and download for both the employee and for the company. For the advisor, this is great. So come tax time or really any time, they can say, okay, we want to see what's been going on with this company, or for the CFOs, they can jump into the ESOP. They might say, oh, actually, under this ESOP, the founder must have forgot, but this person actually left midway through the year. So they can very easily go in there and pause the vesting and lapse the options which shouldn't have vested. So they'll be recycled back into the pool. The alternative to doing that outside of Cake is spreadsheets, and to confirm that, probably emails back and forth. Whereas here you could do it and say log into Cake and check that's correct. And obviously a big plus of that is then all added to your options register to be completely compliant and keep a good track of the transactions which has occurred throughout it, which you can very easily get in there and export and send to whoever you need as well. The one final plus is if you do get employees exercising their options, it's much easier process to then have them transferred straight over to the cap table with all of their details added, and then they can still log in and see their shares in the company. So the incentivization doesn't just stop once they've got their shares. They'll still be prompted through announcements, like you said, Michael, to log in and say, hey, yeah, I do have shares here. I want to see how much they're worth now. So it gives them that tangible aspect.
We've just got a question in there from Elena. So do these ESOPs need to be registered with ASIC? Well, the ESOP doesn't, and the options don't until they're actually exercised into normal share capital. So then they actually become a shareholder.
That's right.
Or the EST becomes a shareholder. And then.
Yeah, and that's really, I was chatting to a few of our partners recently about the startup concessions they brought in 2015 and how they brought them in to use them for both share option plans and share plans. Since they were brought in 2015, the consensus is 98% of companies have done option plans. And that's one of the main reasons that you're not required to update ASIC with all of these different offers. It's only when they exercise. Often they won't exercise until there's actually an exit event about to occur. Even then, they might just be cancelled and bought out at the same rate rather than becoming a shareholder directly. And then in terms of buybacks, if an employee leaves, you can simply click pause auto vesting lapse options back into the pool. Whereas under an employee share scheme where there's shares up front, you have to do that buyback, which is just a bit of extra effort.
Charlie, just before you jump off the system, I wonder if it'd be good to actually the notifications to registered agents, and then also actually just showing you through the access to the system, like how the company's going to invite the advisors in or the accountants in.
Awesome. Yeah, so we do have the feature in here that so we're just in the dashboard here. This is going to be improved shortly as well, where you get a lot more information straight in there. But in terms of the registered agent, what you can do is put your registered agent name and email in there. And, whether that's ILA or whether it's a bookkeeper or even your CFO, what that will mean is whenever the company makes a change to its cap table within the Cake account, like issuing shares, exercising options to shares, they'll get a notification at the end of the business day saying, dear registered agent for Aviato, this cap table has changed with the following transactions. It'll summarize them in a form that's pretty much copy and paste into an ASIC update form. Please update ASIC within 28 days of this email. So it just makes sure that the company's not left with those pesky ASIC late fees. And then if it gives them that opportunity to quickly review it, we did consider for a while whether direct ASIC integration was a benefit, but while there were many that said, yeah, that's great, there were just as many that said, look, we'd rather an in-between step just to make sure that the transaction is right before it goes off to ASIC to then have to correct it later on. And often that is the advisor having a quick glance over it and saying, yep, we'll process this. In terms of other features of the platform, we won't go right into the raise. Happy to take anyone else through that if they want to talk about it another time, but that is what Michael mentioned, where you can quickly and easily manage a capital raise. Similar process to the ESOP, where you can send out offers and manage the sending, signing and document sharing with those investors, and then quickly and easily issue their shares and issue their share certificate, transfer them to the cap table, and then update ASIC. In terms of the cap table, you have the full functionality here showing the undiluted and the diluted ownership based on the options in there, both vested and unvested, and you can dive in deeper to get some details on those shareholders, which can be really useful when you're sort of entering transactions and need a quick refresher on where everything's at. And then in terms of documents, you've got your document storage within this tab, where you can also manage the signing of all of the documents you've got out in the transactions, and you can create and upload your own templates to be used within the platform as well, which is extra useful for advisors when they have a few recurring templates. So let's say that you use the same offer letter for pretty much all of the all of the companies you help out ESOPs with. You can just make sure you can get that in a loadable form and use that. And again, communicate. This is used a lot, especially with companies like crowdsource funding companies, which we have a lot of, where they can provide regular and insightful updates to their shareholders that not only is quick and easy for them to do and send out, but is in a format that the shareholder can actually engage with and match to their ownership rather than just another email that they might just glance over.
Yeah, I know. The LightYear directors are really liking the fact that, because I've been seeing all their communication now at shareholders using Cake, and they love the way it's coming out, and also the whole platform. So
cool, awesome. But yeah, any questions on any of this command center? Make sure you can sort of keep up with where it's all at, and you can keep your valuation up to date here. This will shortly be applied to the options, like I mentioned as well, so that you can toggle on and off whether you want the employee option holders to be able to see this valuation. But yeah, really, this is like a spot where we often see advisors invited to quite frequently. So you can invite anyone you want on different levels of access. And we really see most companies will at least have their accountant in there, sometimes their lawyer, and then a couple of extra staff, maybe their HR person and their CFO. So they've all got one spot where they can log in and see the source of truth. Awesome. I'll jump out of there unless anyone has anything they'd like to check while I'm still in here. Nope.
Cool. There was a question that came in the Q&A, an anonymous question. I just responded to it, but effectively just said, what was the tax treatment? I said, look, it all depends on the plan rules and the EST and how it's rolled out and everything. So it's exactly. It's not as simple as just this is the tax rule fits to this.
No, it's unfortunately a classic lawyer and accountant answer that it depends.
Yeah, that's right. Unfortunately, it does.
Yeah, there are concessions out there though. So yeah, I'd suggest just getting in touch with Michael and saying, hey, this is where we're at. This is what we're doing. What works best, and that's the best way to get started. Because if you can fall within the tax concessions, that's often making it easier for you to set up and a bit easier to communicate what the actual benefit is for the employee too.
Yeah, fantastic. So just to finish off quickly, I thought I'd just run through cap tables. I mean, I know Charlie's just shown you, but I just grabbed the definition from Investopedia. It was very interesting, I thought, because it goes, a cap table is a spreadsheet or table, and Cake's really good. I mean, I've been CFO in ASIC listed and private public companies, and we used to always manage a lot of everything on spreadsheets and now cap tables and everything. And this has just been a breath of fresh air, having gone through that that process, especially with extremely large number of shareholders. And I went through LightYear Group's cap raise 1 and 2 prior to, and this was prior to us coming on with Cake, and to have done this third and final one using Cake's just been amazing. Like, it's just been so streamlined, and I feel in control, if that's best use of the word. So so cap table effectively, I've put it up so it doesn't show any of the LightYear Group shareholders, but and this is just a little snapshot. So yeah, our version of Cake actually comes up there saying ILA powered by Cake. So when we're rolling out ESOPs or doing capital raise or cap tables, we have that as part of our wholesale partnership. So it just shows you the cap table there in terms of undiluted, diluted, share type, what's on issue and everything. As I said before, we've been doing the capital raising for LightYear Group. I've been running that. It's due to close pre-30 June. If anyone is interested, feel free to reach out to me at michael@lightyeardocs.com.au. We do still have a small amount of capacity in there. Our minimum target was 550, and it was purely nothing to do with working capital, just to do in relation to LightYear Docs 2.0 and the development costs in that. We've got a maximum of 990, and we're pretty close to hitting that at the moment, as you can see. And this is a great thing with the Cake. It shows, okay, our goal was 990. We've already got a commitment. So subscription applications out there of 845,000. I got pretty close to that in the first 72 hours, I got the minimum in the first 72 hours, which was a wonderful result, and just shows the support that all our members have got there in our platform. But we're pretty close to closing it now, and and we're pretty close to starting to roll out LightYear Docs 2.0, which is great as well. So if anyone wants to find out more about ESOPs, cap tables, capital raising, anything about ILA, then book a discovery session. I've got our info at iloveaccounting.com there, but feel free to reach out, ask questions. I'm happy to put you in touch with Cal and Charlie as well. We're happy to jump on as well and help everyone through the process. So Charlie and Cal, thanks for joining me today on this great session. I'm quite passionate about ESOPs. I'm quite passionate about ILA as well, and also the Cake platform. I love what you guys do. And you've got a great team there as well. It's really good business model, and really doing some great stuff.
Thanks, Michael. It's great to have the opportunity to actually connect with your community, and we'll certainly be here to actually help along the way. And ultimately it really comes back to our bigger mission is to really see more equity in more people's hands, and we're all about how do we actually work with great partners, and how do we actually reduce the whole friction in that whole process, right? So yeah, that's what it's about.
Yeah, definitely, 100%. Well, thanks, guys. Thanks everyone for joining today. This will be sent out, recording of this today, and it'll be up on our the LightYear Docs website too later today from our great support team. So thanks, guys. Thanks everyone for joining us. I'll speak to you again in a fortnight's time.
Cheers.
Thanks all. Have a good one. See you. Bye.